The past year has been extraordinary for investors. The S&P 500 gained around 30%. That is a phenomenal return. But a story that's generating even more buzz is Tesla. An investor who bought in around this time last year at a price of $294 would have seen their money triple into $968 at the all-time high of this year. The stock's meteoric rise set the media on fire. A fire that was no doubt fanned by some of Elon Musk's more interesting displays this year. But on the day that I am recording this, the stock markets had their single biggest day drop in 2 years. What can Warren Buffett and Tesla teach us about all of this craziness? Fear is in the air. Recession or stock market crash worries loom. But is this based on reality or is it based on emotion? In today's video, I wanted to dive into one of my favorite lessons that I learned from studying Warren Buffett, and to see how we can apply it to the story of Tesla and the worries of a stock market recession. Now, first of all, in the case of Tesla, a 300% rise in the stock price is absolutely incredible. Anybody would be happy with that. And if you're sitting on the sidelines, then you can't help but feel if maybe you've missed out on something. And for some people, this fear of missing out created a pressure that was so immense that they had to buy in and try and ride the wave. As I'm filming this, the stock price of Tesla is around $833. Whether this wave goes on to grow or it crashes into the sea below is anyone's guess. But I think that something that we can all agree on is that the rise in Tesla's share price is due at least in part to emotion, much like the 3% drop in the stock market that just happened. Now, I think more than ever, hype and fear have the power to drive the stock market wild, at least in the short term. And herein lies one of Warren Buffett's favorite lessons. Warren didn't arrive at his success on his own. He had a mentor by the name of Benjamin Graham. Ben wrote the value investor's Bible, The Intelligent Investor, which also happens to be Warren's favorite book on investing. And inside of it, it contains one of his most favorite lessons about investing in the stock market. The lesson of Mr. Market. Imagine for a moment that you are an investor who is interested in buying some Tesla shares. First, you would need to research the company. You might want to evaluate the CEO of the company, understand their products and business model, and then maybe run a few numbers to come up with your own valuation of the company. Let's say in this case that we decided Tesla's fair value was around $300. So now it would be time to go and approach Mr. Market. Because in our hypothetical world, Mr. Market is the one who determines the price that a stock can be bought and sold for. So we'll have to go and ask him for a quote to see what Tesla is trading for. But here's the catch. Mr. Market is a manic depressive. Hey, Mr. Market, how's it going today?
Absolutely fantastic. Just marvelous.
Well, that is so great to hear. Hey, so I actually came by because I wanted to buy some Tesla shares. What are they trading for today?
Tesla, my favorite company, my word. Elon Musk is just the next Steve Jobs, isn't he? Have you seen him dance?
Yeah, he's a pretty interesting guy for sure, but what was that price though?
Oh, well, yes. For a company this marvelous, today I will sell it to you for $900.
Wow. Okay, I'm gonna have to think about that one, so maybe I'll come by another day.
Don't wait too long. Tesla is only going up and up.
Hello, it's me again.
Oh, hello.
Mr. Market, is everything alright?
No, everything is not. I'm very sad today.
I'm so sorry to hear that. Did something happen?
No. I just listened to some Billie Eilish.
Oh, I see. Well, Anyway, I came by again today because I was interested in buying some Tesla shares. What are they trading for today?
Tesla. Oh, that terrible company. My word, I am feeling more blue every moment that I think about them. Elon Musk is a total wreck. Did you see his interview on 60 Minutes? Just terrible. I will sell you a share of this dumpster fire for $190 today.
But last week Never mind. Okay, I'll put an order through.
There you go. Now be on your way. I'd like to sit in the corner with the lights off.
Would you look at that? Mr. Market had a change of heart. Because he was feeling extremely pessimistic that day, he was willing to offer us up shares at a very low price. This presented us with a great buying opportunity at our valuation. Now I wonder if we can use Mr. Market's mood swings to our advantage. Good morning, Mr. Oh no.
Oh, sorry.
Hey, it's okay. What's going on, bud?
I watched the Joker.
Yeah, that'll do it. Hey, so you like movies?
Yeah, I do.
Have you ever seen Life is Beautiful?
Oh, I love that movie. How heartfelt. What a masterpiece.
Yeah, it just makes you feel good, right?
Yeah. So good. I feel so good now.
Great. So hey, I'm looking to sell those Tesla shares that I bought. How much can I sell them for today?
On this, the most loveliest of days, you can sell a share of Tesla to me for $400.
Excellent. Okay, let's do the trade.
Wait, wasn't Life of Beautiful also very sad?
It has sad parts so you can realize the happy parts.
No, I remember now. It was so sad.
Crap, that was a stupid suggestion. So we're still good for that $400 sale, right?
No, I'll buy it for $150 or else leave me alone.
Okay, so this was a very dramatized version of my own kind of conception of Mr. Market, but it's very similar to the Mr. Market that Warren Buffett likes to talk about. Obviously, Mr. Market is the personified version of the actual stock market. Warren points out that the stock market is extremely subject to people's emotions. When people are feeling very optimistic in the stock market, it tends to drive prices higher. And when people are feeling very pessimistic, it also tends to drive stock prices lower. Throughout the years, months, or even days, the stock market goes through these swings because of how people are feeling at that particular time. This can cause stock prices to stray very far from what their intrinsic value should actually be. The prime example of this is how the market behaved today, largely because of coronavirus fears and general pessimism. In the case of Tesla, I think that most people can agree that the 300% rise in less than 12 months is a little extreme. This is a good example of hype and optimism driving up the price of a stock. But the lesson of Mr. Market actually contains something that we can use and take advantage of. One of Warren Buffett's most often quoted lines is, "Be fearful when others are greedy and greedy when others are fearful." What he means by this is when people are feeling overly pessimistic about the stock market, it could be a good time to buy because prices might be low. Conversely, when people are feeling overly optimistic about the stock market, it could be a good time to sell because prices are probably going to be high. The key here is to leave out our emotions out of the equation. We want to formulate our own intrinsic value of the investments that we're participating in and then use the market to determine if it's a good time to be a buyer or a seller. Another thing that Warren Buffett reminds investors of is that market quotes or price quotes are there for our convenience. They're not there for us to look at every day and base values of a company off of. They are just simply something to look at to see if it's higher or lower than what we think an investment should be valued at. And so with all that being said, I challenge you to think of the market as this Mr. Market fellow and use him to determine whether the market is offering you good or bad prices on your investments. What do you think about the stock market crash fears and Tesla's rise? Let me know in the comments down below. I'm Steve Antonioni, and this has been Cash College on Mr. Market. Thank you all for watching, and I will see you again soon.
you.